Uh, Good afternoon, everybody. This is Dennis Wilborn from the Active Trend Traders, and I am partnered up this afternoon with David Grandy from All About Trends. How you doing, Dave?
I'm doing really good. How are you, Dennis?
Hey, excellent. It's been just one awesome week in the market. It's been a lot of fun to trade if you like to trade to the downside. As we get started in today's discussion, I just want to remind everybody that, one, the materials that we present here are for training purposes only. And any observations that we've made regarding the market and or stocks that may be setting up for potential trades are purely observations, and they fit the systems that both David and I trade. None of these are recommendations to go out and take action on on what we're observing. So I just want to remind everybody of that. So David, I'm going to start off with just a real quick look at what's going on in the market this week, okay?
Sounds great.
Okay. If you're an IBD subscriber, you know that the market has been deemed in correction, went into correction this week. But we'll take a real quick look at the S&P, the NASDAQ, and the Russell. What's interesting is whenever the market goes into correction, I always like to just lay in a line. As you'll see here on my charts are set up, I have daily charts on the left, weekly charts on the right. And I lay in a line to show me where a 10% correction will be. And as you can see, for the NASDAQ, it would be down here at 1695 and some change. 1695 and some change. And then but as you can see, the S&P held up fairly well this week, and it's maintained its support level here at about 1840, and but it's in this little box here between 1880, so about 1883, 1885 down to 1883, and just kind of didn't go anywhere for the week. When we get to the other indices, as we're moving on there now, you'll see that they are showing additional weakness that may be of concern. Again, the candlesticks that we saw in the NASDAQ over the last 3 weeks are three really bearish type candlesticks. We get almost a bearish engulfing 3 weeks ago, followed by somewhat of a shooting star, and we get the follow through to the downside this week. The moving averages I have on my weekly charts are this purple one here is the 20-week, which corresponds approximately to the 100-day moving average, and the lower one here is the 40-week, which corresponds to about the 200-day moving average. Again, marked in down here is if it gets to a 10% correction, which will be below its existing this pivot low right here, which was approximately February 5th, where it made its rebound and quick run. If it gets to that low, it would be dropping the 4,000 point level. I'm trying to get my pencil to work here, Dave. It's not working. Okay, not a problem. On the daily chart, we can see that the NASDAQ has come down to the 100-day moving average and is stalled right there. But it's always interesting to see how oftentimes they find support. The price action finds support at the moving average. Moving over to the Russell. There we go. I laid in a Fibonacci on the Russell just for points of interest, and one of the things that I found very interesting is that the Russell from this low in February 5th up to its high, it has done a 50% retracement of that move this week. Again, as the NASDAQ bounced, it too bounced off the there we go. It bounced off the 100-day. But it just posited right there. I'm going to take this off really quick so we can get a closer look at the price action today, which I find a bit concerning for potential, what's coming into the market is that buyers took up the NASDAQ today, but then they came in early, about halfway through the day. Sellers came back in and took the price action right back down to where we did finish at the lows of the day. On a weekly chart, it too, like the NASDAQ, is showing some significant bearish action, and this week closing at its low but right at a moving average could lead to a potential relief rally next week, or a little bit further down and then a relief rally. But that's what I'm seeing right now in the market, David. So does anybody have any questions on what's going on with the market? And Ashi asked if I calculated 10% correction from the most high point, and yes, I did on all three charts. Okay, David, have you been looking at some charts or some stocks that have a great potential of breaking out next week and going to new highs?
I have examples of stuff on the long side and on the short side.
Okay, well, I'm switching the presentation over to your computer there.
Okay, great. So just my real quick comment on the NASDAQ. We've been here before, as you see by the red circles, and like Dennis was saying, it would not be surprising to see some sort of relief rally because we have done that each of the last two times that we've been here, and here. And we could easily chew around here at the lows and along the trend line for a little bit before we see that rally. But as of now, the market is still in an overall big picture uptrend, and we'll see what it's made of, I guess, next week. So in uptrending markets, we have really the only pattern you need to know is the pullback off highs pattern. And here we're looking for stocks that are in confirmed uptrends. They're above the 50-day moving average, and they pulled back in an orderly, low-volume way towards support, which is typically a trend channel and or the 50-day moving average. And so we have a few stocks that are setting up that way right now, and it actually held up really well during this downturn. Zulily, you can see here, is a recent new issue. It's pulled back very nicely, and it's trying to hold on to the 50-day. It actually had a really nice day today. For us to initiate a trade here, we need to see a break above the pink line. That triggers a trade for us. Ideally, it'll continue to pull back here a little bit and towards this blue line and retest that what's once resistance, and hopefully will now be support, and then trigger for us. That's what we'd like to see with that one. Okay, next one, Under Armour, really holding up really nicely. We had a huge gap up here on the earnings release, and it's formed. It's basically just pulled back very nicely, well above the 50-day moving average. This one should be one of the first ones out of the gate once we get that relief rally. Should it show up? 58.com. This is the Craigslist of China. Again, another new issue. You can see it's trading in an overall uptrend here as defined by the green lines, and it's pulling back nicely. It lifted up very nicely today off of the support here, and again, we're just waiting for a break of the pink line to initiate our long side trade. So that's uptrends and downtrends. It's kind of the same thing, except we're looking for pullbacks, but this time it's pullback off lows. This is when a stock has already broken through support and is now going to rally up towards an area that was once support and is now resistance. And typically this is the 50-day moving average. Good example of that is MasterCard. This is what it looked like last week. You can see here it was an overall uptrend, crashed through that support of both the trend line and the 50-day moving average, and then set up a rising bearish wedge here as defined by the pink lines up to the 50-day moving average, and then it rolled over. So the place to initiate your short sell trade is on this downside break of the pink line. We have a few more that are setting up. We don't really have any current setups right now because we just broke, pretty much a lot of stocks just broke through their support, and now we just need to give them some time to rally back. And when we talk about a possible rally back in the indexes, these stocks will most likely rally with it and form these pink channels that we saw with MasterCard. So we'll see if Splunk goes that way. You can see it's broken down, and now it just needs to form that pink channel. Same thing with Netflix. And there's a few other stocks that we're watching, but we just want to keep it to a couple stocks here so we can get to your questions and answers. How to contact me, allabouttrends.net. We're a daily newsletter on the stock market. We have a 15-day free trial, and you can check us out and trade alongside us. And you're welcome to call me or email me anytime, and more than happy to help you out.
Hey, Dave.
So with that, I'll kick it back to you, Dennis.
Okay. Hey, Dave, thanks a lot. One of the things on the MasterCard and Netflix, those were just awesome trades to the downside this week. I know that I was able to get into MasterCard as it broke down below the trend line that you had drawn, the little pink line, for an option trade, and so that would turn out to be a very profitable trade for the week, which was just, I was glad I was there. It's always fun to make money on a credit card company because they always tend to make money on us, right?
Exactly. Give them back their own taste of their own medicine.
That's right. So, hey, I'm going to whip back to, and Dave and I are going to pop back and forth, but as he said, hey, let's get it opened up to anybody who has some questions. We would love to be able to answer those questions, or at least we can attempt to answer questions. So anybody have any questions today, or any stocks that you would like us to take a look at? And if you'll just raise your hand, I can unmute you and away we can go. Okay, Dave, I'm gonna have to get back to there we go. Okay, Yashi, if you'll take yourself off mute. Okay. Barbara. Yeah, Barbara.
How do you know which option to buy when you're, say Netflix is so expensive, I don't want to short it. Say I want to buy a put.
Barbara, that's a great question regarding like Netflix. I go in and I like to trade some of the weekly options, or just if I'm expecting just a 1 week move where I'm trying to pick up the initial momentum of the down move or the up move, I'll go 1 to 2 months out in the option. I will go one strike price in the money, and I'm not going to get into
so you don't look at a delta or anything like that, like a 0.70 or anything?
Well, if I'm I look at a delta. If the delta's 50, that catches my attention. But I don't go so deep in the money that my deltas are like 70 or anything like that, because then, especially on the shorter term options, I'm just counting on picking up half of that move. So if it moves $5, if I pick up $2.50, that's fine. Does that answer it for you? Because I can get into a lot of depth on that we don't have. Well, it would take an hour and a half to explain all the thing of what goes into selecting the options, but that's just a quick and simple of it.
Okay, thank you.
Yeah, Ashi, you said you have a question. If you'll take yourself off mute, I can unmute you also. Okay, Ashi, I'm still showing your phone is muted on your side, and but Christian asked about J.P. Morgan. Let's see, J.P. Morgan. What is that? JPM?
Yes.
Hey, excellent. So, Dave, what do you think?
Well, I mean, here we have a stock that's in a nice uptrend, and I mean, for me, I mean, I'm not a real candlestick person, so I can't tell you what all the symbols mean. But just big picture, I see a stock in an overall uptrend, and right now I just need to see it pull back a little bit towards support for me to get on it.
Yeah, And on the week, on the weekly chart, Christian, what I see is basically it has run up. It held up fairly well considering what the market was doing this week, especially the. But J.P. Morgan, the indices that it would be in are like the S&P or the Dow. But I don't follow the Dow that much because I'm after the growth stocks. And but its action this week, it's above its 50, which is here, and it did do some pullback. The sell, and I looked down here at the selling volume. While it was above average, your buying volume over the last few days has been well above the above the average line. Candlesticks, it did get a bearish engulfing of several days, and so it may be potentially pulling back to this previous breakout high at this point. Get my drawing tools out here, but you got a support line there, but then you also have support down here if the moving averages continue to trend that way.
This reminds me of another trend we're starting to see in the market, and I did a TV interview about an hour ago and about all the new IPOs coming on board, and right now we're seeing some profit taking in some of the newer names: Facebook, Tesla, Netflix, and more established stocks like J.P. Morgan and Applied Materials, HP, Xilinx are hitting new highs or very close to it. So there definitely seems to be, which is why the Dow is one of the indexes outperforming versus the NASDAQ right now.
And so that's absolutely correct. And Chris also had a question about Qualcomm. And I'm seeing the same basic thing, Dave. It's just it is an uptrend. It is a household name. Qualcomm, for me personally, it doesn't show up on any of my list of growth stocks, and so I don't personally follow Qualcomm. Dave?
Right, but it's another example of a big cap tech that's making new highs.
So, okay, Ashi, you're unmuted, man.
Hey, Dennis, can you hear me?
Yes, we can.
We can hear you fine.
Oh, finally. I was trying multiple ways to be able to hear. So I need to follow up on Barbara on the options. So you said you normally go for the weekly options, right?
Yeah, I like to sell weekly premium.
Yeah.
In other words, when the weekly options come out on the week, the Thursday of the prior week, I like to be looking to see if there are potentials to sell premium.
Okay.
And that's the way I typically utilize the weekly options. And if you'd like some more information about how I'm trading option, you can always shoot me an email, and I'll get into more depth on that. And then if I'm going directionally with my options, I like to go out either 1 month, 30 days, to 2 months, because my time horizon for trading is typically 2 to 6 weeks. Okay.
Okay. And do you also add on the options in case if the directional trade is going in your favor?
In some certain circumstances, yes, I do. But primarily, I'm after that short swing trade. That swing trade that's going to take me from like the pivot low, or when it breaks out of the trend, the short-term pullback off highs that, like David has talked about, I call them bull flags. When it breaks out of that bull flag, I'm expecting a run up to the previous high, or in the reverse of that, a run down to the previous low, or a significant pivot low. And I'll just try to take a chunk out of the middle. Like on the MasterCard trade, it moved like approximately $5 from its from its breakout this past week. Let me throw on MasterCard real quick. Okay, I bought my option here. I bought the 78 in that would expire in April, and I wrote it down, and I sold a little bit at 74, and then I sold the rest of it at as it hit the 72.75 level. And so out of that, approximately $5 run, I picked up about $3 out of the middle on the option.
And you took it at 72 because there's some short-term support there, right?
Yeah, I took it at 72 because I'm showing this, right at about 72. 72. And that's one of the things that I try to fade the support level, David, is we had, this swing low here and then another swing low here, but this swing low here was like 72.11. Mm-hmm. And so I'll fudge up approximately 25 to 50 cents and to put in my profit target. Because this area down here, what it is it's a support zone, not a support point. So,
right,
okay.
And then it could be an area where MasterCard does end up bottoming out at and forming the bottom of a cup.
It certainly could, because MasterCard could bounce back up there. And the reason that made the MasterCard trade so appealing was we had the 50-day moving average, 50-day moving average rolling over and coming down. We had this low volume wedge up, which is the David also had a trend line. I think you had a trend line that kind of went like that, Dave. Mm-hmm. And I just looked at it as a low volume wedge up. It failed. This break above the 50, it failed and dropped back down, and that was my trigger to say, hey, it's time to get short. And I do puts in order to get short in the stock. So, Dave, any other questions out there, guys? Well, with that, Dave, I want to thank you for, and I want to thank everybody who attended and came into the webinar this afternoon. And I'm going to go bounce back over here, Dave, and want to thank everybody. And you can reach us. Here's Dave's information all about trends, and he provided that at the end of his presentation or his presentation on the stocks. And then active trend traders, feel free to contact us at www.activetrendtrading.com and sign up for our free biweekly newsletter. Thanks a lot for everybody joining in, and we'll be interested to hear any of your comments you may have.